Hello, fellow traders. 'Tis I, the Rumpled One, coming to you Sunday, November the 20th. The year is 2022. Let's talk trading. Weekly, open, and gap. As always, these videos are for educational purposes only. Your results may differ from mine. And let's see. We're into the fourth trading week of the month. So, risk management. Never lose more than you're willing to lose on any one particular trade. Make sure your stop loss is in place and your position size is sized according to the risk that you're willing to take. So, a quick look at the weekly chart here. The dashboard shows all gaps have filled. The pound gapped up slightly and came down and filled it. In fact, we are now 39 pips below the weekly open. 41 off the high, 20 off the low. And actually the price came up through the launch pad, but we'll take a look at that in a little bit here. We're putting in the opening range for the week, and you can see we're 290 pips above the opening range for the month so far. Taking a look at where we are for the year, 1,671 pips below the yearly open, 1,497 above the yearly low, and 1,894 below the yearly high. Did I say below the yearly low? Above the yearly low, 1,497. For the month, though, we are 390 pips above the open. And inside bar action, we had an inside bar on Friday, and you can see here we are just below it. The trigger lines call it 56.8 there. That's 118,568. So we're right there triggering a breakout to the down side of that inside bar. And you can see here there's lots of inside bar action. Though for today, we're only 6 hours into the trading day, and we don't have any ranges over 100. Though the pound's clocking in at 60, which is respectable this time on a Sunday/Monday. You can see here we've only crossed the weekly open a couple of times, and then we went down, and you can see here this previous H1 bar opened at 36, hit the launch pad at 40, and hit a high of 54. So there were pips to be made there if you were trading at that time. Now, the range is at 60. It's large enough for green rats, and you can see here the launch pad was in the green rat zone. So that was kind of a nice opportunity there if anybody traded the launch pad. Bambino flex indicators indicating a short. Price near the pivot, it's indicate the pivot trading plans also indicating a short. Okay, we have a high of 96 and a pivot at 96.8. That's 118,968. And so we missed it by about 8 points. But if you were trading fading the pivot, you can see we opened slightly below it. There wasn't much to be had. But for the week, we missed last week's pivot down at 1662. I'm sorry, that's last week's pivot. We've already taken out this pivot today. Already taken out the weekly pivot. And if you see here, there's the weekly pivot right there. And we took out the monthly pivot a long time ago. in and out of that lower wick zone. Actually, we were out of the upper and into the lower. But if you take a look at the daily chart here, you can see that was a pretty compressed candle with a lot of upper wick and no lower wick. At least not much to write home about. And you can see once again, price doesn't like staying in the wick zone. It just doesn't like staying there. Taking a look at the weekly ranges here, we're only at 60 pips, but let's see what happens. Remember, last week was compressed, only 319 pips, even though it did break out of the previous week's high. So look for this week to maybe extend. But let's remember, Thursday is Thanksgiving here in the US of A. And then Friday's Black Friday. So we could have another muted week. We'll just have to wait and see how that plays out. And once again, we haven't extended the range. Looking at the trade reminder. We've narrowed that distance to the moving average, the EMA 5. What I like to, that's what I use an indicator to. It says the monthly looking here is turning up. We exceeded the previous range. And it says buyers have strong control at the moment, along with the weekly and daily sellers. And looking at the higher, low, lower, high triggers, you can see we had a trigger at 1854. Price has dropped. It's stopping right along that 3 ball. And we had a trigger of a lower high back here at 1844, which is in the launch pad. So you can see we moved through the launch pad a few times. Actually, we came up and out, back into it, and back up again. And one thing, we like to talk about looking left a lot of times. And you can see when these lines are close together, how price kind of struggles in these areas. So decisions are being made here, 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 and then right here again. And you can see we had a 1 ball put in. So we had a blue line there, 1 ball on the bottom, 3 ball at the top put in. So we just can wait and see how this plays out. And looking at the Walmart lines, you can see we've had some nice movement here. We have a 19, 3 over 20, then a 17. So that's nothing to sneeze at. And you can see here we had a green H1 at the launch pad, which yielded 10 pips if you stuck it out. And you know, that's one of the things about trading, is that some traders don't really realize how long it takes to make pips. I mean, here we had a nice move. In 2 minutes, had about 7 or 8 pips to be made. But that doesn't happen that often. And that's just something you have to be aware of. So if you're looking to make lots of pips, chances are you're going to be in a trade for a long time. And sometimes, just because of our emotions, we start making decisions in the moment, in which there's really nothing wrong about that. But sometimes you can kick yourself, because if you're too focused on the price, you might miss something on the chart. But if you're not focused on your money, you might miss an opportunity to bank more, as opposed to giving some back. So for example, you can see here, plain as day, we've got higher lows, then all of a sudden a lower low, but this was an outside bar, it closed above, and then we resumed the higher lows, and finally it broke. So possibly this candle, this right here, was an indication that of things to come. Or you could look at this one where you made a 3-ball. This candle failed to go higher, then all of a sudden turned bearish. You could have jumped in, and once again, lower high, lower high, lower high, lower high, lower high, then a higher high, then another higher high, but it pushed down. But you may have been out somewhere around here, once again, bagging some nice pips. But you might say, well, that's only about 3 pips or so. But once again, depending on how heavy you trade, 3 pips could be what, 30 cents, or it could be $300. So it's just, you know, where you're at. And we talked about looking at the money, looking at percent return, or looking at pips. And there's no right or wrong. You have to figure out what works for you. Because sometimes I look at percent return, sometimes I look at just the money, and sometimes I look at the pips. And, you know, when it just depends on what's going on. It's a lot of times I might not have a set rule for one, but I might have a set rule for the other. Like if it's so much money, take the money. Yeah, if it's such a percent return, take that. But a lot of times if you write these scenarios out, or if you go back and look at the charts and write out some scenarios, you might be able to formulate a plan that makes you money. So, fellow traders, hope you had a fun, safe weekend. Hope you have a profitable week. Remember, it's not what you trade, it's how you trade it. So drain the banks. TheRumpledOne.